Hi everyone, welcome back to Bearish Podcast. So this session is going to be the discussion about the stocks listed in the different countries. So we see that Anand sir speaks about Nestle, Maruti Suzuki, and says that we should consider investing in the parent company in which country it is listed. So in a similar way, some Indian companies are listed in other countries. Like we take a look at Dr. Reddy and Infosys for an example. Does the same thing happens in US market? Like US citizens, will they think that buying Infosys in Indian market is cheaper than buying Infosys at US market?
Okay, it's a good question you asked, but your example is wrong because the way you're looking at it is wrong.
Okay.
First of all, the company in India, Hindustan Lever, Nestle in India, they are Indian companies, and the parent company owns the Indian company, and that's a share which is being listed. So Anand is saying instead of owning the son, you might as well go buy the father. That way you get the entire family. Not only this son, all the other sons everywhere, plus the daughters. You get a full khandan you can get by buying the father. That is the idea. What you're talking about is different. Here you're talking about the same father is selling goods here and he's selling the same company shares over there also. Understood? So when you're buying a Dr. Reddy share in Infosys, you're still buying the parent company. It is not the share of a US subsidiary owned by the parent company. So the share which you're buying in the US is actually transferable ownership to the Indian shores. It's a complicated process, but you're actually buying the share of the Indian company. So you can sell that share, you can buy it in the US, and technically speaking, you can bring it to India and sell it in NSE. So if you see this price arbitrage, there's hardly anything. Okay, it's not like you're saying in Toyota or Suzuki, or you're seeing in Nestle or Nestle India, because the price evaluation of Hindustan Unilever is sky high. But if you see the valuation of Unilever compared to that, it's much cheaper. Same way the Japanese car companies. If you see Toyota's PE ratio and compared to the Indian PE ratio, it is nowhere. So that's why it's cheaper to buy it. Same way Anna was talking about Hyundai. Hyundai is doing a big IPO in India. The Korean company is not being listed in India. They're creating an Indian subsidiary. And the parent company is going to vacuum money back to Korea. So he's saying in that case, why pay sky high evaluation? You might as well buy the Korean company. If Hyundai is what you want, and you're very keen on owning Hyundai company, right now itself you can buy it at a lower valuation. So that is what you have to understand. You understood? So he's not talking about buying the company. He's trying to make you buy at good valuation. So valuation of the company you're buying should make sense. Just because something is expensive and it's a great brand, you should not buy it. Yes, it's a great brand. At the same time, the market is saying it is priced correctly, then you can buy it. It's the same thing the way we're talking about banks. Remember HDFC Bank, we spoke about IDFC Bank and Karnataka Bank. Just because the HDFC is a great bank and has many branches, you cannot buy the share. All that is true, but is the price correct? It's not correct, then you can't buy it. Same way, you should look at Hindustan Lever and Nestle India. Any other ones which are listed in India as a subsidiary, you should look at it. I hope that gave you some clarity.
Yeah. At the beginning of the video itself, I understood that my way of thinking is wrong.
So correct. And not a lot of investors like you would be thinking that. Will be, let's say they're sitting in the US, they'll be like, why should I buy Dr. Reddy here? I might as well buy it in India, it'll be cheaper.
Yeah.
But Dr. Reddy USA you're not buying. You're buying still Dr. Reddy India. Okay.
And my next question is, when we look at the share price of Dr. Reddy, which is listed in America, it is mentioned Dr. Reddy ADR, Infosys ADR like that. So what is ADR? I know the full form. It is American Depository Receipts. What is that?
So it is a mechanism of the way it is listed in the US. Because to list it in the US, you have something known as ADR. So ADR is a mechanism which foreign companies can be listed in the American stock market to sell them, but they're not fully listed as American companies are. So it's a special classification which they have, which enables foreign companies to access American capital market. So if you want American invested money for your company, like I told you in a previous video, why do business people list companies? They need money for their business. So this is an avenue created by American government and American market to allow foreign companies access to a US capital and for the US investors to make profit. So this ADR is a special way to list. And also what you can do is you can take a share and you can chop it into pieces like mutual fund.
Okay.
So when you buy an ADR, instead of buying one full share, you can buy about 10 ADR units makes one share. You understand? So there are different ways to it. So if you look into it, you should read before you buy the ADR. What is it that ADR is offering? What it is exactly you're buying into? You should research and buy, and just not blindly buy. Otherwise, have a good financial, investing person who will tell you what you're buying, is it right or wrong, and you should tell them what is it that you want, and then they'll tell you, no, this is not what you're buying. So you get clarity into it.
Okay.
All right. And this is a way Anand is also telling you to buy Japanese stock. When he says buy Japanese company, he's not saying go open one demat account in Japan and start buying. He's saying American market is listed in, and these are the big Japanese companies which are listed in American market. So through American market, you're buying the Japanese company.
Okay.
Okay.
Yes, sir. So I hope that this video is informative and you had some understanding about the Indian companies which are listed in American market and how to look into ADRs and when should you look into investing in that. So if you found this video useful, please share it with your friends and subscribe to the channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.